Welcome in Caleb Silver, editor-in-chief at Investopedia, where they compile so much data, and you have all the folks that are part of your team there and surveys and such. But one thing that has been really obvious is the big CapEx spending that we've been seeing. It started with that Meta print a couple of quarters ago, and we all sort of sat back and said, what? They're spending how much? And it just took off from there, right? I mean, what's the trend on the CapEx spend?
Yeah, big spending as much as you can, especially building out the AI infrastructure, especially building out cloud. These are the profitable areas of all these big tech companies right now. So they can tell you anything they want about sales and sales guidance. It is, how much are you spending on CapEx? What are you developing? And how is your cloud business going? Because that's where the profits are. That's where they need less employees but make more profits. The margins are there. The more they talk about the spend, the better off these stocks seem to do. And the companies that benefit from the spend, the Nvidias of the world, some of the other chip makers who are the beneficiaries of this super spend.
And I was looking, CFO Susan Lee was talking about whether or not they were going to have to go outside, and they were raising a lot of the money and paying a lot of the CapEx spend on their own, but whether or not they were going to have to look outside to really boost the CapEx spend, because they were looking to get to 100 billion. Obviously, AI doesn't come cheap. Tell me, let's break this down a little bit. So you have them in groups, right? Microsoft.
Yeah,
Meta. Go ahead.
I started with Meta because Meta really came out yesterday and surprised us all with how much they intend to spend, because they raised that forecast, 114 billion to 118 billion in CapEx. That's to scale AI. That's to scale the AI super intelligence research team, Reed Talent. They're paying seven-figure salaries to some of the best engineers out there, and they'll continue to do so. This is a zero-sum game, by the way. You either have to dominate this space or you're going to get left behind, and I think these big tech companies know that. Obviously, Meta wants to do that because of its huge advertising business. This helps a lot. You're going to hear the same thing from Amazon later on today. Microsoft, $80 billion in CapEx spend. AI data centers, Azure expansion, can't get big enough faster. Hey, they just raised this money today just with the share price increase. It's a $4 trillion company. Thank you very much. Alphabet, $85 billion in CapEx spend. That's a raise of $10 billion. Same thing. Scale the AI infrastructure, build out Google Cloud, and create the custom chips so they don't have to rely on anybody else. Amazon will tell us today, $100 billion in CapEx spend.
So it's pretty amazing. I mean, they're at $4 trillion now for Microsoft. Dan Ives thinks it's going to be a $5 trillion company. In the meantime, what are they spending on? I mean, it's to scale these data centers, to boost artificial intelligence capabilities and the monetization of AI, right? Microsoft is, I guess, one of the best at the monetization of the AI, as is Nvidia, right?
Yep, and because they're actually making money with the technology versus just making themselves much more productive. And you will see these companies catch up to that, but they know if they don't spend now, they will never be able to get to the big revenue generation that is the promise of AI. And in terms of the cloud storage, we just can't get enough of that either. That is the commodity of the 21st century. Our data, all this data that we're generating, especially in an AI world, you can't build it fast enough, you can't build it big enough. Dan Ives, you just mentioned, talks about the superscalers. They are the superscalers with the big deep pockets, $4 trillion in market cap. That gives you plenty of spending room when you want to build this out.
I mean, Amazon's today after the bell. We talk about the cloud spend that they are putting in place and all the artificial intelligence. Most people think of Amazon as just a retailer, and that's a big part of the company. Yeah. But this cloud part, cloud services and the growth,
fastest growing part of the company.
Yeah, I mean, let's talk about some of the growth and why AWS is so important.
Right, well, obviously because of what the data that Amazon collects, not just through its marketplaces and through e-commerce, but think of everywhere else Amazon is present. Web services, right, Amazon Prime, but also in their big advertising business. A lot of people don't know how big of an advertiser Amazon actually is. It's a growing part of their business. AI is just going to help make that much more scalable, much more productive, much more profitable. We'll probably hear them talk about $30 billion in revenue from Amazon Web Services, if not more, because you can't get enough of it, and they know that they're going to need it going forward. So that's a big deal. The questions for Amazon when you go into earnings will be, how big is that becoming? How much money are you putting into Amazon Web Services, and how much into AI infrastructure? But then, how are you handling tariffs, if at all? Because the one big thing about tariffs with Amazon, forget about the lawn furniture and stuff like that, it's the smaller products. It's the $800 and under that the president just said will have no de minimis exemption on those tariffs.
Saw that, yeah.
So marketplaces, small businesses that deal through Amazon to get their products from overseas, they'll feel it first. But as long as web services is growing and they're spending a lot on building AI, investors are going to be happy.
It's interesting you brought us revenue per employee. the numbers are pretty big and sizable in difference as well. So I guess it's worth noting.
I think this might be the most important metric in Silicon Valley right now, not to be crude, and I don't live there, I'm here with you, but when you think about productivity, who is making the most of the technology, who is making the most of their employees, it's Nvidia at the top of that list. $3.6 million per employee, Nicole. That's a heck of a business. Meta, 2.2 million, Apple's about 2.3, and then Alphabet 1.9. Amazon is not on that list. Why? They have the fulfillment part of the business, so they don't have as high a revenue per employee. You'll find other companies on that list that might surprise you as well, like an Altria, but the fact that these big tech companies are squeezing so much revenue out of each person that works there and actually slimming their workforces in some cases, this is the profitability that investors are looking for. This is what a lot of people are talking about out in the Valley.
And when you talked about money in the clouds, you had Microsoft Azure, the $75 billion, Alphabet, Google was up to 32%, Amazon Web Services, you saw that up 17%. And the very first screen that you brought to me from company filings and such, the big text CapEx binge, hey big spenders, anybody who remembers the Broadway song, I love that. But you know, really, when you look at these names, it's up and away. I mean, Meta's above 100 billion, Microsoft's 80 billion. I mean, these numbers, what happens going forward? They're going to be at 200 billion?
Absolutely. They can't spend enough and they can't spend it fast enough, because if they don't get to the spot, one of these competitors will take it. They don't want anybody else dominating the AI space. Microsoft obviously has the deal with OpenAI. That exploded their CapEx spend because the demand was so big. If they're continuing to support that, and I think that they are, they're going to keep putting money into it because they're just in the second or third inning of building out AI. We haven't even got to agent AI, although Amazon will probably talk about that on the call today with Alexa. Now you can talk to Alexa and have it generate AI responses for you. Robotics, that's coming next. We're like in the very early part of this build out. Even though it seems like so much money has already been spent, so much more needs to be spent in order for them to dominate the space.
I mean, you included Apple at least once on here, but Apple hasn't really been the AI player.
It hasn't, but it generates a lot of revenue per its employees, 2.3 million. Why? Because their products sell and they have to be replaced all the time. So there's a lot of product generation there. They need high sales in the consumer products for them to continue to generate this type of revenue per employee. In terms of the stock price, though, it has not been along for the ride in this rally right now. When you think about what investors, which companies investors are preferring in this rally, it's the Nvidias of the world, it's the Microsofts of the world, right? It's the Amazons of the world to a certain degree.
New high.
Right.
New
$4
high.
trillion companies.
Well,
Why?
I don't know about Amazon, but the other ones were all new highs.
Right. New
Let me
highs
double check.
Because they continue to generate a lot of revenue, and they're going to continue to spend as much as they need to make sure they're in the right place 5 years from now to be this profitable.
Caleb Silver, Editor-in-Chief at Investopedia. Thank you always. Appreciate it.